Thank you for such a nice introduction, sir. It's a great pleasure always to be in High City ACT, an organization which is also a forward-looking organization that's important and with a lot of vision. So if you look at the goods and services tax in the first place, this reform, if you're going to think it is only a tax reform, answer is no. This is a reform for the purpose of eradicating the black money in the country. Now, how is that the Prime Minister is planning to eradicate this black money? It is through Digital India. Now, somebody asked me in one of the important forum, so how are you connecting this with the Digital India campaign? It's very simple. Today in Delhi, there is about 30,000 square feet office which has been constructed for GST ISTN. That is nothing but the platform for the IT network of the goods and services tax, where Infosys is helping them. Infosys won this bid, which is about 1,400 crore plus bid, and they are looking at connecting all the GST network. By connecting through the GST network to all the business people and the consumers in filing their returns and paying taxes, it will not only increase the indirect tax collection, indirectly it will also increase the direct tax collection. The reason is, how it is planned in the digital platform is, whoever is registering in the GST platform will get a unique number in the GST that will be mapped to the PAN number, that will be mapped to the bank account statement, and it will be mapped to the PAN number of the respective person. Now when that happens, it's very simple. There is going to be a query. For example, whatever nowadays if you look at many business people, if you look at, they show different turnover for different reasons. One turnover for income tax, another for excise, another for service tax, and because of this there is complete mismatch in the sales and turnover. And the sales is the number, or the turnover is the number based on which, or the profit is the derivation of your turnover, based on which your tax is calculated. So now what will happen is, when the GST platform is going to come, when the digitization has happened, a simple query like whether the sales in the excise is matching with the income tax and service tax returns, like that a query will be raised and it will throw out the exception, and that exception will be distributed to the offices in the respective location. Then the offices will issue notices and then go and investigate. It's going to be simple as that. That is the vision of our Prime Minister. And if you look at when our Prime Minister took over the charge in June 2014, he said he will end the tax terrorism. In this country, if you look at tax collection on the one side, and we have a deficit budget. Until now in India, we have a deficit budget, and we don't have a surplus budget. If you look at in the current year, the budget is about 19 lakh crore. 19 lakh crore. India's budget can be surplus if the black money is eradicated. If the black money is eradicated, I will put it across in a very simple way where the black money is sitting. The black money is primarily sitting in the gold of the domestic consumption, two in the real estate. Now why is black money being generated? Because there is a cash involved. So if everything is digitized and everything is a card payment, then everything will come into the financial inclusion. And when everybody comes into the financial inclusion, then automatically black money will be eradicated. That's the plan of our Prime Minister, for which the first step is the goods and services tax. Apart from being a tax reform, one of the biggest tax reform in the world, I would say, because India is a huge democratic country, implementing a tax system or changing a tax system is not that easy, and the plans and amount of efforts the government is doing behind it is enormous. So this GST is not only a tax reform. I'll just explain the tax reform shortly, but before that, this GST is going to be a game-changing thing for the entire economy, because there is going to be a black money eradication and also financial inclusion which is going to come. The plan of the Prime Minister is, when all the business people are brought in under the digital platform, automatically the consumers also will be brought in. At the end of the day, where is the black money generated? At the commercial point. If every business person is integrated in the GST platform, in the IT platform, automatically consumers are included. At the end of the day, the black money happens either through direct tax or indirect tax. If the indirect tax point, where the payment is done by the customer and the businessman pays that and files a proper return without there being a difference in the sales figures and profit figures, automatically your black money is eradicated. There is a statistics, if you look at a YouTube, what is the total amount of black money that is either sent out of India or being circulated in India? They say out of all the statistics, there is a conservative statistics which says that 70 lakh crore, 70 lakh crore, and our budget is only 19 lakh crore. And these are all the black money which got accumulated over a period of time, total accumulation. Now, if this is tapped, if this comes into the system, automatically India is a developed country. So because all that you need is money, and when you're going to pump that money, all the development projects will happen. So this is the plan of our Prime Minister, and definitely the government has taken a lot of measures for ensuring that the tax terrorism goes off. And when Prime Minister announced, he said, one nation, one market, one tax. Now, what does he mean by that? And many papers you would have read, GST bill has been passed, GST bill has been passed, and Tamil paper has reported Porukal Matkum Sevai Masoda has been passed. But take it from me, GST bill is not passed. What is passed is 122nd Constitutional Amendment Bill. Now, for this, when was the decision taken in the government? During 1999, 2000, it was taken by Atal Bihari Vajpayee. He said the GST has to be brought in India, and he said some correction has to be made in Constitution Amendment Bill. It took 20 years, nearly 20 years, for the India to change that Constitution Amendment Bill. For that we are celebrating. For that we are celebrating. What is that change? Nothing. A simple change. A change where states will have the power to levy service tax, and center will have the power to levy sales tax. That's all. To put it across very simple. So where the central government will have the power to levy sales tax, and state government will have the power to levy service tax. If you're going to ask me earlier whether this power is there or not, sir, answer is there was no power. Because under the constitution, there are two entries. One is union entry, another is the state. There is a union list and state list. Whatever appears in the union list, then the central government has the power to levy tax. Whatever appears in the state list, then the state government has the power to levy tax. Now, under that power to levy sales tax was not there for central government. Sales tax or VAT, as the case may be. Sales tax or VAT, as the case may be. Beyond manufacture, the central government did not have the power to levy tax. Now, because of GST, because of the Constitution Amendment Bill, that power has been provided for the central government. To the state government has the power to levy service tax now. Earlier, if you go to a restaurant where it is operated through air condition, you would have noticed that the service tax is levied. Now, the service tax, who was levying is not the state government, it was levied by the central government. Now, you might think, sir, the restaurant is being operated in Tamil Nadu. He is a businessman. He is collecting from us and he will obviously pay to Tamil Nadu. Answer is no. There are different departments like excise duty separate department, VAT separate department, then for your customs separate department. So each department remitter has to make separately. So similarly, whatever your restaurant collected, the service tax and VAT component, he will collect from you in cumulative amount. But when he pays, he will pay the tax separately to each department. That's how it was happening. Now, what is going to happen now is the central government has the power to levy the VAT component. That is nothing but it will be called as GST. That will be called as a GST. And the state government has the power to levy the service tax. Why this power has to be enabled before GST Act is passed? Because only when this power is there, under the GST, the central government can levy the VAT component in the GST, and state government can levy the service tax component in the GST to equalize, basically, to equalize the power. For this, the government took 20 years. Now you might ask me, why did Congress oppose? Why did BJP oppose? Even the Prime Minister was in Gujarat, why did he oppose? For information, the papers carried different news. Papers carried different news. One view is very simple. All the governments were supporting GST. All the governments were supporting GST. They were opposing the conditions of the GST. That's all. Everybody wanted GST to come. Everybody was welcoming GST. What they were opposing is the condition of the GST. Even today, Tamil Nadu government is opposing not the GST. In fact, GST is already existing in the system. That is called VAT, value added tax. In fact, in the European nations, it is called as value added tax only. There is an organization called OECD, Organization for Economic Cooperation Development. That OECD also calls as a VAT forum only, which is equal to GST. Now, what was the each state and what was the governments were opposing is the condition of the GST. Nobody opposed the GST, condition of the GST. And if you look at, finally before the GST got passed, what did the Congress oppose? Why am I digging into the past? Before even I introduce the taxes, you should understand what has gone into the mind of the government. What the Congress said finally is, Congress said you have to ensure that when a state loses the revenue because of introducing the GST, that state governments has to be compensated. Two, the Congress said we may not know what tax rate you will bring. People will suffer. That is how they have to say. People will suffer. So please fix the tax rate in the constitution itself, where in the constitution amendment bill itself. Now 3, they said there need to be a GST dispute resolution mechanism. Absolutely welcome sign. So any regulation should, in this country, the beauty of this country is any regulation will not pass just like that. There will be 100 oppositions. I welcome the opposition, because only then the act will have a refined and fine-tuned and constructive way it will pass. And this GST is not an exception. Then when the Congress placed this request, 2 requests was accepted. That is compensating the loss and establishing a GST dispute resolution mechanism. And one more thing I forgot to tell you, eliminating the 1% additional interstate GST equal to CST. That is central sales tax. I'll explain you all that things slowly. That was not taken into consideration, but 2 proposals are accepted. But fixing the rate in the constitution amendment bill was not accepted. I'll tell you the reason. Today, to introduce the power under the constitution amendment bill, it took 20 years in the government. Tomorrow, if I want to increase by, for example, I fix 18% in the constitution amendment bill, in the constitution, tomorrow I feel that I have to increase that by 0.5%. Then I have to pass through again Lok Sabha, then Rajya Sabha, then state approval. Each state has to approve. Any constitution amendment, the states has to approve. 15 states has to approve, minimum 50%. If this has to happen, another 20 years and 40 years might happen. Because today we have majority in the Lok Sabha, that is Prime Minister has majority in the Lok Sabha. The constitution amendment bill has passed through Lok Sabha just like that. If you look at the Congress government, if you revisit the history, it was not the present government, ruling party, which was opposing the GST. It was the coalition party which was opposing that government which was ruling. So, looking at this, you don't know how much time it will take. So, if you fix the rate, then in future you cannot increase or decrease. When the tax becomes broader, there may be the government which may take a decision to reduce. When the tax is becoming narrower, then the government will look at increasing the tax rate. So, the economic reforms cannot be brought in through tax mechanism. So accordingly, the government said that fixing the 18% is not possible, but we will look at bringing other 2 changes. They said we will compensate losses to 100% to all the state government. 100% to all the state government whoever is incurring losses. Before I get into the details of the GST, to lay a foundation, our Prime Minister, if you look at, with a lot of vision, there was an announcement. Every 5 years there is a Finance Commission report which comes. In the last year, when the 14th Finance Commission recommendations came, he has voluntarily increased from 32% to 42%. For example, 100 rupees I have in the country, for each state government allocation would have been 32%. But our Prime Minister increased it from 32% to 42% before even the Niti Aayog meeting happened. That was a devolution. Where the 42% of the total share will be allocated to all state government. In fact, my personal view is that none of the state governments will incur losses because of GST. Now, coming back to our own Tamil Nadu, it's very important agenda. Tamil Nadu government has given a report where 9,270 crores will be a loss to the Tamil Nadu government. I accept to that point, because in case of the manufacturing states, under the GST regime, they will lose revenue. I'll explain that with a pictorial graph. As of now, you just understand, if a manufacturing state will lose revenue, because the concept under GST is consumption point tax, destination based tax. Place of supply will be the place where the tax will happen. So, for example, whatever is manufactured, if you sold for the Karnataka or to Maharashtra, the taxation will happen there, and that state government will collect, either in the form of CGST or SGST or IGST. I will explain you shortly. But the manufacturing state will lose out. But whatever the loss the manufacturing state whatever happens to the manufacturing state as a loss, the central government has said full 100% will be compensated. Second, we forgot a fact that none of the papers actually has reported, saying that the respective state governments has a power today to levy service tax, which is part of your GST. Now, Tamil Nadu levying the service tax is a new thing. Before that, there was no power to levy service tax. Now tell me, especially in Chennai, mostly it is IT services company, and the revenue will increase. That will compensate. I am not saying that Tamil Nadu will not incur a loss. Tamil Nadu will incur a loss that will be compensated by way of extra service tax which the Tamil Nadu government will collect, and also the central government is compensating the loss. Even if you lose 100 rupees, the central government says, I will give 100 rupees to you. Then if this is the case, for how many years the central government is going to give? 5 years. Why they are giving? They assume that within 5 years the state will grow into the developed plans, and they will develop, and the tax base will widen in Tamil Nadu also. Then when the tax base widens, the state GST also will increase. Because of that, the loss will be compensated. This is the plan of the central government. My personal view this is, and lot of paper carry, it is a valid news. Views are different. And people say, what people look at this in Tamil Nadu is 9,270 crore is a loss. If GST is not there, 9,270 plus is my revenue. But I take a different view. What view I take is 9,270 crore you lose, and you lose for 5 years also. The Tamil Nadu government will get a compensation from the central government. It is a responsibility of the state government to grow into the developed plan by attracting the foreign investor, increasing the tax base. Very simple. Now let's take where a foreign investor comes to India, establishes a huge IT services company. Now because of establishing IT services company, employees will get salary, then tax collection for the central government will increase. Then second, there is going to be service tax element which the IT services company has to pay. So because of increasing the domestic investment, there is domestic investment in the state through FDI, automatically your tax collection will increase. So I don't hold a logic where the Tamil Nadu government will incur a loss. I am accepting there will be a loss, but it will be compensated, is my personal view. And so what is the benefit of the goods and service tax? Put it across in a very common man language. Today if you go to restaurant, you have, let's understand, you go to fruit shop in Greens Road, or you go to any restaurant and have some one item. Below one item total, you will find 3 or 4 taxes levied. For example, let's assume that you go to a AC restaurant. You have only one item. Below that you will find your VAT levied, service tax levied, then you will find luxury tax levied. So, and if it had been within the cinema theatre, entertainment tax also will be attracted. So that is expected to attract, but there is a litigation going on. So what I am saying is, there are a lot of taxes that is being levied. Why should they levy on the same transaction so many taxes? Because there is a power to levy. Because the indirect tax regime itself was brought in when it was acts were brought in one by one. The state governments were thinking how to increase the revenue. So they brought central excise, then they brought service tax, then they brought property tax, then water tax, property tax, water tax, road tax, entry tax, octroi tax, entertainment tax, so many taxes. So at least for a consumer, we look at paying it. At the end of the day, in indirect tax, what happens is, consumer has to pay from the pocket. Simple. Who has to pay? Consumer. In direct tax, on the person on whom the tax is levied, he has to pay. In indirect tax, it is levied on one person, collected from another person. That is the difference. At the end of the day, the tax will go off from the person who gets the consumer only at the end of the day. So looking at this, if you look at businessman, today they don't know what forms to file. Today they don't know what time the remittance has to be made. Looking at all those things, there's a huge compliance cost. Who is responsible? No, chartered accountants will come and advise you on a different footing. This form has to be filed for this. There is a separate service tax audit from the department. There is a separate central excise audit from the department. And not only that, government itself is not sure which is a good and which is service. I'll explain you with some small example in a very understandable way. SIM card, is it a good or a service? SIM card, is it a goods or service? This was a litigation. No, you cannot answer. I can also not answer. It was a litigation that went until Supreme Court. And there was a case also in the BSNL those days. What is a good? What is a service? It was brought under 362A of the Constitution. Now this debate went on, and they concluded saying that SIM card is only a service element, because SIM card is not is a good. If you look at it, it is a good, But what is primarily in SIM card is there is a service element only, for that only, so service tax has to be levied. Like that there is a litigation going on. And second thing, if you look at a lot of e-commerce companies, they were doing only service job. But in one of the states, one of the Karnataka for example, the service, apart from service tax, the Karnataka government said VAT has to be levied. Because there is a storage of warehousing has happened where before even it is dispatched to the ultimate consumers, it is stored on 31st March, you have a stock on which the VAT has to be levied. Like that the litigation started coming up. So to ensure that this kind of a situation doesn't come, GST answers. GST answers. Now low compliance cost, because if it's going to be in the digital platform, one form will be there, one return will be there. That's the view of the government. How it's going to come up, it yet to be finalized. It yet to be finalized. In that one return, you can file and the revenue gets allocated to the state government and central government. And second is boosting revenue through low tax evasion and input tax credit. Now, before I get into the input tax credit, I already told you the tax evasion component will go off. But if I interact with some trader associations, I was interacting with the trader association president to know what exactly they feel. They are actually opposing it. What they are saying is, sir, ultimately it is a tax which is a consumption based tax. Now, as being a president of the trader association, what I am feeling is, if the GST is going to come in, all the traders about 10 lakhs, presently whoever makes sales about 10 lakhs has to register under the GST regime. That's a proposed amount. If they don't register, then it is an offense. Second, they register, but what happens with them is they will collect the tax, but they will use the tax for working capital. They will use the tax for purchasing goods, use the tax for paying salaries. If they do that, again the non-payment, they will attract the consequences of not paying. Then third is, you talk about digital India. Your internet itself is not working in airport. Where from 3G it becomes E. In the rural place, how it's a valid point. I don't have an answer now. When I was supporting for 2 points, in the third point I don't have an answer because I am also suffering. I am also suffering. So he has a valid point. So when you talk about digitalizing of your returns of the traders, my trader is there in Tirunelveli, which is a remote location where he makes one of the departmental stores. It's a consumption point. He makes huge turnover of 40-30 lakhs. He will come under the GST regime. Now he does not have the internet access. You expect that person to come to the city and then pay the tax and go. What is that you are expecting? In the physical form, I used to go and file it and then finish it off. But now, when you say that the return has to be filed on the digital platform, really whether it will be possible. Even if I file in the digital platform, my officers wanted to see me regularly. So again, the physical forms comes into picture. He has his own viewpoint. Now looking at this, definitely what he said is also a constraint. That internet platform has to be increased, for which the plans are being developed by the government. If their government is intending to collect tax, definitely they will bring in the platform. Obviously there is a revenue involved. The government also will invest on the platform and they will definitely do it. Then growth in GDP. What is his point? How bringing a GST will increase the GDP? I will explain that. Now gross domestic product is the measure of the country's growth, economic growth. Now presently India's growth is about 7.5%, which is expected to overtake China shortly. And now, by bringing GST, Honorable Finance Minister has given a report which says that there will be straight away 2% increase in the GDP. Why? Because logistics efficiency. Today, you manufacture in Tamil Nadu. What happens in Tamil Nadu when you manufacture in Tamil Nadu? Let's take example of some of the automobile companies. When they manufacture, let's assume they are sending that manufactured automobiles to the dealers. When they send that to Kolkata, let's assume that it takes 8 days to Kolkata by lorry. Why it takes 8 days? It can actually reach by 5 days. Because if you look at it, has to wait in tolls, it has to wait for paying road taxes, then entry taxes. In Maharashtra, there is a octroi taxes which they pay. So because of paying taxes, and believe me, the most difficult thing for a driver is not driving. It is in waiting and paying this road taxes. And you know, officers are sometimes reluctant. In the afternoon time, there will be lunch time, which is 3 hours. And night time, again, they'll close at 8 o'clock or 9 o'clock. They will say, just wait for some time, verifying that document, this document. It's a big time problem. And check post, beyond that, there is a check post also. Because of this, there is a logistics delay. Efficiency is not there. By bringing GST, the view of the government, the vision of the government is you pay tax here and carry the document with you, keep showing the document wherever there is a requirement, And because of this, logistics time will be saved. Because of this, the production will increase by 20% compared to presently. And because when the production increases, the GDP will increase by 2%. GDP will increase by 2%. Now 7.5% is the GDP, and if this achieved, now the GDP will become 9.5% with the present figure. And India is the fastest growing economy in the world. So no other economy is competing with us, not even China. So that's the plan of the government. Then one common market. Now what is a one common market? So by bringing GST, what the government visions is make the product's price similar. Now let me explain this with a mobile example. You purchase mobile in Delhi. The VAT rate is 4.5%. Example, you purchase in Tamil Nadu, it can be 12.5% to 14.5%. Now what is happening? People go to Delhi to buy mobile. When they are in Delhi, they prefer buying mobile in Delhi because the VAT component is very less. Now when they come and buy in Tamil Nadu, then the VAT component is more. Now when you go, sometimes you would have seen a lot of your elders and all, they used to purchase the goods from Pondicherry. I will buy the TV from Pondicherry. My grandfather used to say, when I go to Pondicherry, I will buy the PD. Why? Because the tax is exempt there in the Pondicherry. So this examples why I'm giving is to make you understand that on the other side, some of the governments might argue saying that, look, my tax collection is affecting. I'm going to place an argument saying that your sales is going to increase in the state. Because by bringing equalized tax, every state, whatever the rate that is they're going to fix. Let's assume that they're going to fix 18%. 9% will be CGST. 9% will be SGST. I'm going to explain that with the invoice with invoice also. That 9% is similar in all the states when they sell a mobile. So there is going to be equalized levy. And MRP based regime will go off. MRP based regime is not expected to come in the law. It's not expected. When I say expected, the law is yet to be drafted. It's yet to be out for the public comments. Looking at all these things, there is going to be uniformity in the product price. And then manufactured goods becomes cheaper. Now many people might think, sir, how a manufactured goods as a consumer? Next thing is that as a consumer, whether I will pay more or less, sir, for products. Now let me explain that with a small example. You are a consumer where goods are consumed more in your household. Your outflow will become less. Because under today, for the goods, what taxes are levied on an average is 25% to 27%. You know how? There is a VAT component, there is an excise duty component also. If you add up both, the tax rate comes to 25%, which is included within the product price. Now when the GST is going to come, it will rationalize to 18% on the goods, and because of that 27% minus 18%, nearly about easily 9% to 8% will get reduced straight away. Because of that, your product prices will become lesser. Sir, but you are talking about product prices. I go every day Sunday outside restaurant, book Ola cab, and book the urban club, and every services I avail. So household, if I am classifying the household into household which is majorly consuming goods, household which is majorly consuming service. I am not cooking at home at all, sir. That means you are going to incur more service tax, more service, because more GST. Because Sunday, you assume, let me give an example. I give this example all across all the awareness programs. Sunday, what is the culture today? We get up in the morning, go for a breakfast, book a Ola, because we don't want to engage our own car. So we book a Ola. When you book a Ola, there's a service tax element. That is service tax element which will be called as GST going forward. So that GST will be incurred. That is about, which has increased straight away from 15% to 18%. 18% is not the rate, it is projected rate. It is projected rate, it's not fixed rate. It is a projected rate. This 18% you incur, so 18% outflow. Second, you go to a restaurant. Let's say when you go with the kid and wife and things like that, you need to go to a restaurant, AC restaurant only. So you cannot have it on the roadside, definitely. So when you go to the AC restaurant, then again luxury tax, that GST will be levied. That is going to be again service tax element is going to be there. Then after that you go to cinema theatre. Cinema theatre, entertainment tax is not going to be taken away. That is going to be still there apart from GST. So GST plus entertainment tax, your outflow is there. Then again you book a Ola, so Auga service tax element. Then again you go to a restaurant, again service tax element. You come back, and on the way the children wants to play games in Blur, for example Satyam, then you pay service tax. So again service tax element. So if you are going to be a service procuring household, then your service tax element will be on the higher side, because straight away the service tax is going to increase from 15% to 18% under the GST regime. 18% is a projected percentage. It is not a fixed percentage as of now. So this is the thing. So manufactured goods will become cheaper. Then it brings down logistics and inventory cost. And I told you already, logistics and inventory cost will reduce because there's going to be seamless movement of goods. Just in time will happen year after. Just in time will happen year after. Then boosting investment. And important thing is when I interact with the foreign counterparts whom we actually closely work with, they're welcoming GST, especially European people. Because GST, when they hear, whether the dual GST or a single GST, GST is already there in Europe, already there in other countries. Oh, it is also there in India. That is a self-satisfaction. How complicated we are going to make, that's a different issue. India, all the complicated, simplified things, we make it complicated. So that he will not understand. Oh, GST has come. That means it's the same similar model what is there in Europe. So that confidence has gone up. Investor confidence has gone up. Because of that, the investment will happen. And it will also facilitate Make in India campaign. Because what is Make in India? Make in India is nothing but you manufacture in Gujarat, you manufacture in Tamil Nadu, you manufacture in Haridwar. It should not be different. The equalized levy, that is the vision of the government. So if Make in India has to happen, otherwise Make in India will happen only in one state. Only one state. So if it has to happen across the state uniformly, the growth has to be spread, then tax is one of the element what the investor looks at. So now when the uniform tax is there, then the investment can happen anywhere. Apart from the state government coming out and giving up extra benefits is the loss that they are going to suffer. But apart from that, if you look at the holistic picture of GST, it is the same tax everywhere. So looking at that, so this will also promote the Make in India campaign. Then lifting up less developed states. Yes, it will lift up the less developed states. Many people are looking at we losing the revenue. At the end of the day, country's interest has to be also should be looked into. Look at a state like Bihar, which is a consuming state. Now what is going to happen in Bihar is, Bihar, if it consumes more tax collection will happen. Then the state government will get more taxes, and because of that, lot of development plans will happen. Then giving e-commerce sector a boost. Because there are a lot of confusion today in taxation regime of e-commerce. Now because it's clearly told in GST that it's a place of supply that is going to be taxed, now they are clear about how to tax the products and services whatever they provide. Replacing multiplicity of taxes. Now there are multiple taxes. Let me explain that. I will be explaining that with a pictorial example shortly. How it happens is today you manufacture, there is excise duty. After you manufacture, before you sell, there is a VAT element. When you import a good, there is a customs duty. And apart from that, if you procure some services to manufacture that good, you pay service tax. And there is a cascading effect. When I say cascading effect, for example, if I procure an input, for example, I manufacture a cloth. If I procure an input, on that input I pay excise duty. That excise duty, you take a credit. And recognize that credit in your books. It's a bit complicated concept. I'll explain you. So that multiple times I explain, you will be able to understand. I get a raw material. On raw material, I pay excise duty. That excise duty, manufacturer can take credit of the excise duty, whatever they paid. This credit, what they took, can be used for the output, what you pay. Now, what is happening in the credit system is, there is a central government credit system. There is a state government credit system. I told you the state government did not have the power to levy service tax. So whatever the credit system that comes in the service tax, that cannot be used against the VAT element. So service tax credit I took, but I pay VAT on the manufacture. Before I pay, when I say credit, it is like money in your hands, which can be adjusted towards the VAT payment. 100 rupees VAT element you are supposed to pay as a seller, that there is a service tax element which is sitting in your books because you avail service tax. You paid service tax, you took a credit. That credit cannot be adjusted just because VAT is a state concept. Now that will go off because there is a power given on the central government under the constitution. Both central government and the state government are given that interchanging power. When the state government has the power to levy service tax, and then the central government has the power to levy VAT, this year after it, you will not see VAT or service tax. You will see only goods and services tax, GST, in the bill. But nature wise, if you look at, the power has been given to do it, and this goods and services tax can be used for adjusting the credit. For example, service tax credit what you took can be adjusted against VAT payment what you have. It will not be called as VAT or service tax going forward, but it will be called as a GST only. But the nature that nature can be adjusted here. So this is the one of the concepts. I'll explain you shortly with much more example. So one nation, one market, one tax, creating value from the chain is what the Prime Minister's goal is. Let me explain the legal process, what has happened until now. So now, as of now, first the Lok Sabha cleared the GST, that is Constitution Amendment Bill, 122nd Constitution Amendment Bill. It went into a lot of deliberation. Whenever the matter was taken up in the Rajya Sabha, there was a lot of hue and cry. The matters were diverted. Then it was now taken up in the Rajya Sabha, and now state approvals has been granted. 15 states have approved it. Now presidential assent has to happen. It is only a stamping requirement. It is a stamping requirement. President will stamp it is what we are expecting positively, and that he will definitely do it after going through the law. Then many people ask us whether 1st April will be a reality. 1st April can be a reality. Can be a reality. I'm using the word called can be a reality. 90% it can be. It's my personal view. 90% it will be a reality. 10% why am I reserving it? If you look at the arguments placed by the earlier finance minister when the GST, that is Constitution Amendment Bill, was argued in the Rajya Sabha at around 9:30, our previous finance minister said that to the present honorable finance minister, he said this has to be passed as a finance bill and not as a money bill. There is a small indication he has given. What is that he is saying is money bill does not require to be passed in Lok Sabha and Rajya Sabha. Money bill can be passed straight away from Lok Sabha and it can become an act. That there is a provision. So independency, actually autonomy might go off, but they have to go through the GST council. So taxes to be subsumed, threshold for registration and non-registration. You cannot have different. Hereafter it will be either 10 lakh rupees people turnover over makes, sales makes, has to come under the GST regime. Registration is compulsory. And so those kind of threshold limits also will be decided in the GST council. Then the model law will be kept in the GST council. The law before getting passed will be debated in the GST council. So I told you about 90% chance on 1st April. One of the 10% is that why am I having a doubt is the law might get stuck here, stalled here somewhere. So if that gets stalled, then central, I'm not talking about the state GST might get passed. This it's stalled there, it's there. It's formed. GST council is in the, in a sense it's not coming to effect. Moment this law is going to come in. Central union minister is there and all our ministers already are forming part of it. Go, yeah. Meeting has not happened until now.
Only the ministers
allowed.
Minister or
Yes.
finance minister.
Yes. And any member also can be, if they give a nomination. That provision is there, but I have not discussed here. If they're going to say, okay, you go as a nominee, then they will allow it. If a particular minister is not able to represent, then nominee can sit in that. Of course, they can be supported by the bureaucrats who will also be accompanying with them. So, and the voting threshold is also mentioned. How the voting system will happen. We'll see it later point of time when the GST council comes into picture. Then you have floor rates and special rates. Now, what is the basic rate that will be decided and special rates for certain goods. Now, when I say special rates, what does it mean? Our Arvind Subramaniam, that is the chief economic advisor, has given a very good proposal for rates. He said, let the rate be 18%. Let the rate be 18%. That will be a standard rate. That will be there are 3 rates he is recommended. Standard rate is 18%. Revenue neutral rate after knocking off your credits will be 15% to 15.5% would be the rate. Is fine. What he said is absolutely fine. This is a normal rationalized rate. One more recommendation what he has given is 40% rate for sinful goods. This one, beverage, this aerated waters, aerated cool drinks, cigarettes, tobacco, then alcohol. No, alcohol will be kept away. Alcohol will be kept away from the GST regime. I'll tell you what is the reason also to keep the alcohol away. But this sinful goods will include, sinful goods are luxury goods, I would say. Luxury goods. For example, you are planning to buy Audi, let's assume. Audi vehicle, it will come under the luxury car segment and 40% will be levied straight away. So his proposal is right. Many people actually oppose, capitalists oppose when I express this view. Because sir, I am eligible to buy, I have worked very hard to buy an Audi. Why should I now pay to the government 40% additional tax? Is it a sin to become rich? You call it a sinful tax or the luxury tax? The answer is, the government views like this. If you are capable of buying a crore rupees car, then you should be capable of paying 40 lakh rupees as a tax. That is the government's view. Now many people say, sir, government is getting money, keep getting taxes, it doesn't come to the ground level. Answer is wrong. It actually comes to ground level. Let me explain that with a small example. Every year budget, nearly 19 lakh crores is the budget this time. The majority of the allocation has gone for poverty alleviation programs and subsidies. After that only it comes to the other tax benefits. Looking at this, government is doing absolutely great thing. Any government, I am not saying this government or previous government, every government wants to do good thing for the people. And what we see as a common man is, just because we are having inadequacies in our life, then we think that government is not doing anything. So everything boils down to the ground level. The way might be it is given is not right, or it is not reaching the people, but government is doing all the efforts to reach the people. Then that's what there is a foundation called Taxation Foundation. They used to say, as a government you should look at, if you have, for example, in your own household you are having inadequacies. So in the government, when they make a policy, obviously there will be inadequacies for a lot of programs. So looking at this, when this sinful tax or luxury tax goes up, thus tax will be collected and given to the poverty alleviation program. So GST will not affect people who are below the poverty line. So there is a news article, GST will affect the people who are below the poverty line. Let me give an example. That is also not a reality. Answer is, in fact, GST will take care of the people who are below the poverty line. It will straight away increase their lifestyle. I'll tell you how. Now, somebody is buying a Audi car, then 40 lakhs has to be 40% has to be paid as a tax. Then whatever they collect, the first allocation goes to the poverty alleviation program. Then the lifestyle of the people who are below the poverty line increases through their different programs of the government. Then and they are not going to keep the money with them. So looking at this, the increase in tax rate from the this kind of a goods will only increase the or develop the people who are under the poverty line. Second, the people who are below the poverty line, outflow of tax will not happen because they are below the basic exemption limit in the direct tax regime. And the indirect tax also, what they buy is necessity. Necessities are not taxed under the that is, it is kept away. It is kept away most of the time, or the rates will be rationalized accordingly. Even it is there, then they are mostly getting to the public distribution system, which is free of cost most of the time. All the people who are below the poverty line.
Tell me about liquor.
Now coming back to the alcohol. The alcohol is kept away from the GST. Two reasons to it. State government doesn't want to lose revenues. All the state government feel that they get more revenue because of alcohol. Second, so if it is kept outside the GST regime, it is the state government has the authority to tax it. Then petroleum products are kept away from GST. Again, petrol is a highest tax fetching, revenue fetching thing for the government. I'll explain you how. Every petrol bunk is a tax collection agency. I'll explain you. Your oil prices went down, but your tax component did not go down. If you look at your tax component never went down. Nearly in the 100 rupees petrol you fill, 38% is tax collection. And all the petrol bunks collect, and all the petrol bunks are futuristic tax collection agency. You can make all the petrol bunks because every street there is a petrol bunk, every road, main road there is a petrol bunk. So looking at it, it's a very efficient tax collection mechanism. So looking at this, the state government doesn't want to lose revenue, neither the central government wants to take it under the GST presently.
Shops also tax collection agency.
Yes.
What is the percentage of liquor?
No, I think it is 14.5% VAT presently. On excise duty component is anyway there. So all things, they have an issue with respect to that. Now GST will be levied on the manufacturer. Now that credit will go off. Ultimately boiled down to the consumer. Actually. Now let's assume in the alcohol production, you have inputs like ethanol and all these things. When you purchase, the input is paid. Now when the input has to be used against the output tax. Now output tax is levied by the state government. So they are going to say the credit is not available. For GST to separate tax, that is state government levied tax, that still the credit it is not available. When it is not available, the entire cost will be imputed on the consumer. So it will become costly actually. So that proposal is anyway there. So now alcohol, petroleum products and tobacco also is kept away. Tobacco also is kept away. So all three products are kept away. There is customs duty which is kept away. Municipal body levied tax is kept away. So one market, one nation, one tax is a vision that is it's unveiled. Slowly only all these things also will be brought in. One by one reforms will be brought in. So this is what the future government's view going forward. So Now, formulation of SPV IT infrastructure. This IT infrastructure, ICT, ACT being on the digital arena, we need to understand how a GST IT infrastructure is happening. And if you look at IT infrastructure, is one of the things that the government has established. It requires a lot of training. Maybe I want to share this yesterday. I was just thinking where ICT, ACT can play a role in GST. Maybe if you can bring in pool in talents to understand the IT infrastructure of GST, we can do training programs for the government. That opportunity is there for the as an academy for training. Definitely it's a great opportunity. Second, it is also an opportunity for taking this to the college level to streamline it, maybe in future, to improve upon or something like that, where you can make some recommendation to the government. It's a vision. Maybe you can look at how to make it more practically possible. So then I already told you Chief Economic Advisor's rate. So rate will be 18% is my personal view, but lot of papers write it as 20%. But there is another National Institute of Public Finance Policy institution which talks about different rates, but I'm not touching that. That can never happen. Chief Economic Advisor has come out with the lot of views and understanding. So this can be that is every neutral rate will be 15 to 15.5%. Your standard rate will be 17 to 19%, and 1% additional tax that has been removed because the Congress wanted that to be removed and the government present ruling party has removed it. So that 1% equal to a CST is taken away. Now let me explain again. So as many times we see, better it is for you will understand. Now present on the present structure, if you look at on the goods, I told you 12.5% is excise duty. VAT ranges from 12.5% to 15%. Let's take the outer limit. 12.5% excise duty is the highest limit under the present regime. There can be exempted goods, many other goods will be there, concessions and all. 12.5% plus 15%, 27.5% is the levy on the goods presently. It will turn out to be 20% or 22%. It will be 18% if the rate is 18%. I am giving a high, tomorrow why I am giving 20% is I do an awareness program for 18%. Tomorrow if they get common man will forget about the concept. He will come back and say Satyakumar told 18%, the government has come out with 20%. I am setting the expectation high. So 20% to 22%, it will be around 18%, definitely. Okay, then coming back to services, what is going to happen in services is 14%. Straight away is going to increase to 20% or 22% on the higher side, or 18%, never can be 16%. It's going to be 18%. Don't forget, along with 14%, there is a Swachh Bharat cess. There is a Krishi Kalyan cess. In fact, I don't know Hindi. I don't know Hindi. When Krishi Kalyan cess was introduced in the budget, I thought this is for marriage cess. Okay. Krishi. Okay. Then I went to office. Office, you're all listening. Some people were there, what is this Krishi Kalyan cess? After 1 hour of the budget, he said, for farmers cess. They would have told farmers cess, no. He said, only you don't know Hindi, other people will know, no, from other states. So you don't know Hindi means what can be done. So then I understood that the Krishi Kalyan cess is a farmer cess, and this Swachh Bharat cess is for the clean development project of the government.
But there is an education to
That is also will subsume. Now what will subsume is education cess, secondary education cess, and your Swachh Bharat cess and your Krishi Kalyan cess will all subsume under the GST regime. Cess also will subsume. So straight away there will be.
When you made a point, the services tax will be still under the powers of state government.
Yeah.
So what do you mean? After deciding that 18%, the amount will go to the state government, or the decision of 18% will be with the state government?
Now 18% will be segregated into 9% for CGST, 9% for SGST. No more it will be called as a service tax or a goods. Now,
No, I'm not talking that. Initially when you said, in the first slide you said,
yeah.
still the service tax control will be with the state government.
No, never the service tax control was with the state government. It was under the central government.
Okay.
Now because of the Constitution Amendment Bill, the power to levy. Now when I don't have the power to levy service tax, then I cannot levy GST, which includes my service tax element. Now when the power is given for the state government, then the state government has the power to levy the GST, which is including the service tax element. So now what will happen is, I levy a tax. Let me start. Step 1, I levy a tax. Check the tax is whether service or goods. That portion will not come. Because whether it is service or a good doesn't matter. GST only no. So when the GST 18% is levied or 20% is levied, 50-50 will go to the 50% will go to the central government, 50% will go to the state government. So we are not, for example, we buy a Aquafina. We are not concerned whether it's a service or a good anymore. We are only concerned what is the rate GST, 10% for central government, 10% for SGST. Simple. I'll show the invoice also shortly, how the invoice will look like. Now there are a lot of other technical stuff. Let me explain this, very important. Maybe another 5 minutes to, yeah. Framework, dual GST for center and state, IGST on interstate supplies including stock transfers. Then place of supply rules to determine situation of supply of goods and services. Liberal credit regime, full credits available except cross credits between CGST and SGST. I'll explain that shortly. Exemption and incentive schemes to be converted into post-tax refund scheme. Now, if you look at presently under the indirect tax regime, lot of concession and exemptions are there, which a businessman is not able to understand. Let me give a small example. If you look at PAHAL scheme, that is your Pradhan Mantri Jan Dhan Yojana, when it came, now many people have actually given up the subsidy, the LPG subsidy, because they came to know it's after all 200-300 rupees which is getting credited. But for a common man, a middle class, 300-400 is big thing. But no, before that, if you look at, nobody came to know how much was actually the subsidy given by the government to me as a benefit. Now, under the indirect tax regime also, a businessman actually cribs about there is no benefit from the government, but there are so many benefits given, either as a concession the rate or in the matter of on the sales, many things are given as a concession. Looking at this concession has to be visible means what government says, what the government view is, first you pay, then you take as a refund. Sir, the next question that comes from the businessman when I address this, they stop me in this particular point. Sir, refund means it will take 2-3 years, sir. Now, in the present government, refunds are happening very fastly. So, looking at that they will streamline. No need to worry about it. So, on one side, they want to first what they say is, why are they saying that I will not provide the concession exemption upfront? It will break the chain of credits. The chain of credit, which I told you, take credit, when you're paying output, use the credit. Take credit, use the credit. That concept might get broken. If that gets broken, then your cost of goods will go up. So ensure that the seamless credit system is there. The government is saying first you pay and then take as a refund from into your account. That's the government's view. Then subsumed. What are the things that will be subsumed? Let me give let me repeat it. Excise duty will get subsumed. Countervailing duty, which is equal to excise duty, that will be subsumed. SAT, special additional duty, will be subsumed. Service tax will be subsumed. VAT will be subsumed. CST will subsumed. Then entry tax will subsume. Octroi will subsume. BDT to continue. And excluded levies, basic customs duty will not be forming part of your GST. Entertainment tax will not be forming part of your GST. Electricity duty will not be forming part of your GST. So even if you go to Satyam today, you have to pay entertainment tax. It's not exempt. It's not exempt. The excluded products, alcohol for human consumption, tobacco and tobacco products and petrol. So one of the seminars, one of the participants asked me, sir, alcohol for human consumption, alcohol for animal consumption, is it brought under or not? It's the Indian way, interpretation. So so I said, human being is a social animal. Sir, human being is a social animal. According to animal is also included in the human beings. So animal and the human beings are the same. Sir, why are you giving this interpretation? If you go to Supreme Court also, they'll give the interpretation like this only. The point is to look at it in a straight away cases, alcohol is kept away. Whether it's for human consumption or animal consumption, it is kept away. Now,
I think it's for the industrial consumption. That's what
they said.
alcohol, they use it in industrial consumption also.
Yeah, but ultimate consumer is also kept. Ethanol you are talking about. Yeah, you are right. Ethanol is actually brought under the GST regime. Yeah, you are right. For example, in Coimbatore, I know one of the clients where they produce, you must be knowing also, one of the clients, they produce ethanol also. That ethanol is brought under the GST regime. Alcohol, the ultimate product, is kept away from the GST regime. That's what I showed you. Under the GST, you will take credit under the GST, ethanol product and all. But when you actually sell it, that is levied by the state government. It is not coming under the central government levy. So your credit will not be adjusted. So your cost will go up. That's the point I made. So, yes.
When it comes as a
Raw material. Yes, yes.
the alcohol will go into forward product.
For example, let me put it across. There is one company in Coimbatore. They actually accumulate this sugarcane. From sugarcane byproduct, they bring this ethanol. For sugarcane byproduct, they will not have paid the credit tax because it's exempt actually as of now. presently, sugarcane. Now the bagasse from where they produce the ethanol, they bring that ethanol. That ethanol component which is used for an input for alcohol, that is GST will be levied. But subsequently, when the alcohol is sold, the GST is not levied. When the GST is not levied, credit is not allowed to be adjusted. So the cost will go up. That's the point.
The state have a role to set or whatever.
Yes, yes, yes. That's the point.
So when you said entertainment tax at municipal level, what does it mean?
For example, movies, entertainment tax they levy. Kabal is exempted.
Why specific at municipal level?
No, not only entertainment tax, but municipal level. This tax, what is levied, is by the state government. It's by the it is actually not at and municipal taxes, municipal level taxes.
So when you say municipal level taxes, for example, road tax is a municipal level tax?
Yes. Property taxes.
Property tax is a municipal tax?
Yes.
So the toll taxes are what?
Toll is charges, not tax. Again, there's a difference.
So that doesn't come under GST?
Yeah. In fact, toll charges attracted service tax, if you look at.
That component may go inside.
Yes.
But the toll charges will remain.
Yes, yes.
Correct.
No.
So toll will increase.
Toll will increase, service tax. Yeah. Yes, it will increase. Unless they exempt it. See, you are right. Your points are absolutely right.
The road tax will also be there, continue to be there.
Yes.
So that whatever check post will continue to be
Yes.
the same.
Yes.
No change will happen.
But in future, it might. So what they have to do is every year there will be some kind of improvement. Yeah, in GST improvement will happen. You are right. You are absolutely right to an extent where you segregated the charges and tax. Many people understand toll tax. No, toll is a charge on which again tax will be levied, can be levied, and it is levied.
So now
Actually.
what we pay 30 with the
Yes.
rupees is including tax. So if they pay a particular portion to tax.
Including tax. So what in taxation, what happens, sir? I don't want to collect taxes, sir. What government says, you don't want to collect. Whatever you collected is inclusive of tax.
Yeah, that's true.
That the interpretation goes. So I make it understandable. So varying rates proposed, no final consensus yet. It will come to a consensus. Let's not worry about it. Indications of multiple slab rates with less than 20% is being discussed. So the rates will be some 20%. Additional 1% tax on interstate state supplies of goods is removed. Yeah, the GST portion. Now let me explain you the invoice. Now that is the lookout for the consumers. Simple invoice. Hereafter you don't worry about it. So local supply of goods. I'm going to categorize into local supply of goods. Then I'm going to categorize into local supply of services. Then I'm going to categorize between interstate supply of goods and interstate supply of services. That's all. These four things. Beyond this will not come. I'll just explain you one by one. Now we're going to buy. Let's assume that Coimbatore buys some products from Chennai. It is interstate, within the state. Yeah, interstate. Now 10% CGST and 10% SGST. Now 20% the tax rate provided by the government. Let's assume we'll take 20% as the rate. So 10% CGST, 10% as SGST. Now 100 rupees is the price of the product. 10% CGST on 100, 10 rupees. SGST 10% on 100, not 110. So that is a clarification I want to provide. Not tax on tax. Your cess, if you look at 100, 10, tax on tax. Yeah. So that is not the impact. Not that. Hereafter it's going to be on the price of the goods. So it is actually 20%. It's not. You should look at like this: 100 rupees into 20% segregated into CGST and SGST. Not 10% on 10%. So that clarity you have to have. CGST 10%.
At the consumer point of sale, will he segregate all these things and show?
Yes, sir. In the bill we have to segregate.
Whether it's a GST, this 20 rupees is going to pay to a single place, or he will have to pay in two places.
Yeah, no. Two places will not be there. Two platforms in the IT.
The consumer will pay in one place. The system will segregate
Yeah.
to state and service.
Yeah. Now, as your point is absolutely valid. This confusion is already prevailing. Now, how the platform is going to look at, nobody has seen.
No, my question is the platform which is going to take care, or the individual accountant will have to take care?
Both has to happen.
He has to collect 20 rupees, then go pay 10 rupees here?
No,
No, it's only online.
online, no.
Online only, sir. I'm just saying.
No, you come.
Two work I will have to do or one work?
No, in this country, sir, I'll tell you. Now, I'm coming back to that point. As an auditor side, I'm coming.
For example, you take service tax.
Hmm.
Today, whatever education says or Krushi Kalyan says, they say,
Yeah.
when we are paying, we pay 14.5% together.
Correct.
Then they segregate into whatever.
Correct. Now,
Like that?
when the invoice itself shows you two segregation, then there is a lookout to match your invoice with your returns what you filed and the remittance what you made. Three-way approach. When that has to happen, audit side you look at. So what they will say, they have to segregate this and Yes. So they were depots came into prominence only because of CST component, to save the CST components. Yes, especially for Pondicherry, yeah. Pondicherry. And then OEM and customer. Now job work, even if you give 20% GST will attract. Now job work is exempt actually in some of the places. Smaller, yeah. So now hereafter 20% will be there. Whether to give the benefit of the job work is the decision of the council. And SEZ, important point. SEZ, special economic zone. What is the concept of special economic zone is, special economic zones are considered to be a specifically delineated foreign territory for the purpose of India. So if you ask an accountant what is India, I would say domestic tariff area and SEZ are two areas in India. Now whatever you bounded warehouse, you can call it as a bounded warehouse, SEZ. Now when you transfer the goods from the DTA to special economic zone, it is considered to be export. And from SEZ you export, it is exempt from all the taxes. Simple. What is introduced in 2005. Even now it is there. 2005 onwards it got introduced. Some tax holidays were also given. It was brought in the previous government time. It is a model we evolved from China. And this whatever is being sold to the SEZ by the manufacturer, the GST is considered to be zero. But that zero will be whatever the payment has to be made normally and refund has to be taken. That's what I told. Refunds to prevail.
He will have to pay and take.
Yes. 20% will be levied, but he has to pay and take.
He will take full.
Yes.
Technically he will not
Pay anything.
And again, the person from the SEZ, when he sells to outside, he has got full exemption.
Yes, full exemption. No, nothing.
SEZ means zero.
Nothing. But if an SEZ reverse backs and sells to a manufacturing domestic tariff area, it will attract duty.
Purpose of SEZ is to sell
Yeah,
abroad.
correct. No, I know some clients where they
To sell abroad.
Yeah.
And they have tax, so they have zero tax.
Yes.
And now when I sell from ICT Academy, if I have to sell something to SEZ in Dhamram, we have to pay something.
Yes.
Now that will also be not there.
Yes. Like that.
So everybody will now move towards SEZ? Or can many SEZ come up now?
No, SEZ concept itself is to export.
Correct.
Now, so if the export is the agenda, then they will move to SEZ scenario. Not because of GST coming in.
Not all exporters are in SEZ. They are outside also.
Correct. For Tirupur, for example, Tirupur.
You take.
So Tirupur, what happens? Let me explain you. When I was debating in Tirupur, they made a valid point. Now what is happening is 7.5% is the excess duty, balance 5.5 is the VAT component. So it's 12.5% is the amount they paid before export, and they claim it as a refund. Duty drawback.
Full they claim.
Yes.
Even now.
Yes.
Irrespective of GST
Yes.
coming
Yes.
or not, they are having full claim.
Full claim. Duty drawback is the concept.
Okay.
So SEZ is you have a complete tax exempt, and tax holidays of the direct tax is also given, income tax benefits. But in case of the Tirupur exporters, duty drawback concept is there.
They will get full.
Yeah, full. And in fact, they have made a very proactive measure of representing the central government through Ministry of Commerce and Industry already. Tirupur exporters, they have made direct
They
meeting.
will not be affected. No, they will not.
They are saying concession should not go off. Their concern is that.
That is the state government.
State government and central government also. Some benefits they get from their Tirupur, especially with respect to Tirupur, more to do with central government. Textile and all these things. Cotton, today the cotton is exempt from tax.
Okay.
Cotton yarn, before they become looming, power looming and tailoring, it is exempt actually. That they wanted to be exempt, but pay and take the refund, the government says. So the entire structure, these are the structure. So I just explained with the manufacturer's example. So goods and service tax is going to be a game changer. GST will replace all indirect taxes with uniform levy. India will emerge as one uniform market with equal GST rates across the country. That's a vision. It should come. GST will boost GDP, bring down prices as there will be no taxes on taxes. Then it will eliminate corruption and enlarge overall kitty of taxes. Corruption will be eliminated. And you know how the indirect tax regime functions in the country if you have dealt with the offices. And the central excise duty, value added tax, service tax, octroi, luxury tax will get substituted with one GST as of now, and future also other things also will come attracted. So to put it across, what is the rate, how the impact will be for a consumer. Costlier, what will become costlier? Services like hotels, cell phone bills, air and train tickets set to cost more. Then cheaper, goods like small cars. If you are looking at Swift, Santro, i10, i20 also is fine. Beyond that, Honda City slightly, and then slowly if you go to BMW, then you have to bear the cost. Then two-wheelers, SUVs, fans, lighting products, water heaters, air coolers set to become cheaper. I told you the reason. Straight away it is coming down from 27% to 18%. That's the reason. That's the reason. Then GST if set at 18% will be lower than current 20 to 26% on goods. But services will increase from 15%, but it will be higher than the current 15% effective tax rate on services. So services become costlier, goods will become cheaper. Now 20 to 70 basis point inflation will be there. Inflation will be there because it's an indication of the tax reform coming in. Just because inflation is there, don't think about that. Inflations are not the real measure of your price of your products. Yeah, it's a growth. In fact, what you have to look at is to consumer to test whether this government has decreased the price or not. Look at your provisions, what you buy in the shop. Every month, 8,000 provision you are buying. Same product you buy in the next month. You look at 7,400 rupees or 7,600 rupees coming. That means government is really doing well. Has done some reforms. So don't measure just by looking at prices increased. Newspapers, yes, they're writing from the bird's eye view. They may be right from their own view, but you need to check from your own household. Long-term effects. See, if GST would have been brought in before 20 years, they asked me a question. What would have happened? Today, India would have been a surplus country. Simple. What would have happened? Today, the systems would have changed. Everybody would have made surplus. Everybody would be having a thought process. Sir, how a GST reform will bring a forward-looking thought process? Today, everybody is suffering for basic necessity in life. That is the reason we are in employment. If the basic necessity is taken care, then we will have innovative ideas coming in. Simple. Things will come in. So this would have spurred a different platform for the population. We'll eliminate multiple taxes on firms, help ease of doing business. This is also an indicator for ease of doing business. India today stands at 138 out of 189 countries. The government looks at making it to 50 ranks. For one of the tax reform which will bring 10 ranks below at least is GST. In the global level, as per the World Bank report, will reduce logistics cost for firms due to elimination of interstate taxes. Then capital goods prices could fall by 12 to 14%, boosting GDP growth by 0.5% because of manufacturing that GST reducing from 27% to 18%. Will reduce black money, need for financial documentation will increase. So it will reduce black money. That's all. So many people say goods and services tax. I pray that it should be a good, smooth transition. So looking at this, that's the reason we conduct the awareness program. It's been quite some time I've been conducting a lot of queries, a lot of learning. In fact, I was just understanding the framework only. Every time I do a session, there's a new point which is coming in. And for example, today only I gave a right explanation for alcohol. Everywhere when they asked, I was not sure about the inputs which was going in, ethanol and things like that. Then I understood the input, what goes into the alcohol. Now I understand where the credit breaks. Exactly at the point of sale. Because it is kept outside until before the point of sale, everything is taken as a credit. Now the credit breaks and ultimately the consumer will suffer. So this is a learning point. And vision of our beloved honorable PM, GST will facilitate everything actually. How? That is a question they ask me. Sir, you are connecting and supporting the government. The answer is, when the GST is brought in place, indirect tax collection will go up. By indirect tax collection going up, all the registration happening, when the business is connected, consumer is also connected. Then direct tax collection will also go up. When the collections go up, the tax revenues of the government will increase. When the tax government revenue increases, Make in India will happen. Make in India will happen because GST will facilitate that to happen. Then digitalization is already happening through GST platform. The entire India is connected. Now, then Startup India benefits will be provided as a refund and concessions. So benefits will be provided. Lot of fund allocation can be done. Then finally, for skill program also, the government can allocate some funds. And it will not affect the people who are below the poverty line. In fact, it will enhance the life of the people who are below the poverty line. Because the funding, whatever the extra goes, will be allocated for the people who are suffering from the poverty line. So you can always write to me. So I'm always connected to the Facebook. Thank you so much. ICT ACT is very close to my heart. I address in many forums, but there are two reasons why it's close to heart. It started as a small organization. It's a very important organization because today the education system is being revamped and revolutionized by the ICT ACT. In fact, when I interact with the college people, they look forward for all your programs. When many people today speak about ICT ACT in various other forums, PTCI or Madras Chamber or MMA, and all the people speak about the ICT ACT because of the revolution that is brought in. That is the reason it's close to heart. Education is always close to my heart. I've been speaking to Shivakumar sir on the way. We all people came up only because of a tool called education. And I've been working towards that agenda in my weekends. And it's close to my heart because it's straightly connected to the education. And exact identification of the problem. And we're resolving that problem. And today 15 lakh engineers come. Everybody is impacted by ICT ACT. If you make an impact study, definitely ICT ACT had made a great impact among the student community. And every engineer, maybe an alumni for a particular college, but every engineer who comes from Tamil Nadu is an alumni of ICT ACT in the future. So making it as a point, and I think you're doing a wonderful job. I pray and I wish that you should further do it. Second thing is the team built by under the CEO is extremely vibrant, and I'm looking at Anbumani sir, Suresh Babu sir, Amanat sir. I don't know many of the other people's name, so I'm looking at everybody's contribution. I think you're doing a wonderful job with the professionalism. That's very important, and that's the reason I'm always closely connected, and I attend all the programs. And thank you so much. I look forward for many other deliberations, and we can keep staying connected. Thank you so much.